Hello, Lisa J. Stocks. Thank you for coming into this Stock Talk episode. And today we are going to be talking about the Trump accounts, upcoming earnings, and some recent IPOs, mostly SpaceX. So let's get started. Let me see. Is everything coming through okay? Guys, give me a thumbs up as you roll in. And thank you guys for tuning in. Now, let's see. I've been getting a couple of comments and people forwarding stories and articles and things like that, other YouTube videos about the Trump account. So I figured I haven't done a video on it, but I want to take some time just to touch on it and give you my take on it. Now, the name alone might even turn off some people, but let's talk about it. So, what are the Trump accounts? And so, Trump accounts are tax advantage investment accounts for children under the age of 18. And these have been set up, and children born between when? Let me see the dates. Do we have the dates here? Okay, so children born between January 1st, 2025 and December 31st, 2028 will receive a one-time $1,000 investment into this account, and it's held over on Robinhood's platform. So this is something new, and just because it is not just because your child does not fall in between those date ranges of when they were born, you can still open up this account and fund it yourself, and then partner with your family to continue funding it. It can receive up to $5,000 annually. And so this is eligible for all children under 18 with a valid Social Security number. You're going to have to take some steps to get your account validated and things like that, but this is another way in order to get a head start, just like with 529 plans and UTMA accounts, which are uniform transfers to minors. These are ways that you can give your child a head start and be investing for them as soon as they have that Social Security number. So as far as the Trump accounts, it's something new. And like I said, families, grandparents, relatives, even when they get older, their employer can contribute to this fund with them. Even charities can contribute. So it's really a way that is something different, a way of being able to teach financial literacy and get them on track to build wealth. I've already mentioned $5,000 per year per child can be added to that initial $1,000 contribution. We have $2,500 available. You can, an employer can invest, and then the investments have to be into low cost index mutual funds or ETFs that track the US stock market indices. So think of a VOO as something that this would track. So it's designated to be a simple, long-term, low-cost way of building wealth. So it's going to be locked in until the age of 18, and then it'll transfer over to a traditional IRA. So you can leave this in place until your true retirement age, which would be in our 60s as of right now, but who knows what it will be for these children when they reach that age. And so let me give my personal take on this. As of now, well, before I get to that, let me just give a little bit of more what I had in my notes. As of now, over 4 million children have already signed up, and more than 1 million have claimed that $1,000 government contribution. So I hope that all families take advantage of this. Some parents may not have heard of it yet, so spread the word. Remember those date ranges. If you know you have a friend or family member that for some reason is not aware of this, between January 1st, 2025 and December 31st, 2028, they're going to be available to receive that $1,000 contributions. Others might be unsure. Others that have not signed up yet might be unsure of giving the government this information and accepting this money. Some might be waiting for a little bit to see, how, see more news and see how things turn out. And a few might be worried about the tax implications when their child is 18 and ready to apply for the FAFSA and different things. These are just some hypothetical situations that I think could be in people's minds, but another could be, and I'm not trying to make this anything political, it could be that they don't agree with Trump in this administration and what he stands for. But I'm talking to you about this not from the perspective of Democrat or Republican. I'm just talking about we are Americans. We live in America. We have contributed to paying taxes, to paying into all of these things. If this is a refund or this is a benefit that is going to be given to our children, if my child was in the date range to accept it, fund, she's basically she's out of both. I can't open the fund for her because it's only up until 18, so I can't open the fund and fund it for her. But if she was in that age range to get that $1,000, I would take it on her behalf and invest it, of course. So I'm going to go through what that $1,000 could look like even without adding any, contributions of any amount, even if it's not that full 5,000. But let me take a quick second before I get further into my point of view on it. But I definitely wanted to touch on this because I don't think that anyone should deprive themselves of it. And I'm going to give some things that cross my mind as comparisons of things that we will accept. Okay, but let me first take a second to thank Vincent Pascal for that $5 super chat. Thank you for tuning in, and always thank you for being a channel member and huge supporter. So Vincent is saying, when they turn 18, can they move the money from a Trump account to a Roth IRA rather than a traditional IRA? Well, from what I'm reading here, it says that it only specified traditional from what I had researched so far, but I haven't done any huge research into it. Let me know if you want me to do a video, but I definitely will look into that, and maybe I'll put a post up or make a quick video and put it in the members chat. But from what I read, it said a traditional Roth IRA, not a Roth. So as far as if a portion of it could be transferred into a Roth as opposed to a traditional, I don't think so, but not 100% sure on that, Vincent. Okay, so as I was thinking about this, there's been so many things. Like I said, if you don't, I live in America. This is the administration. We're going to have many others. In our lifetime, we've lived through many others. We're going to live, hopefully, through many in the future. The next administration may come in and want to change a lot of things that Trump put into place. Who knows? And so we have to think about this, what this money can grow into in the future. Have your child, has anyone in the chat had their child or grandchild eligible and sign up for this account yet? Now, right now, I'm not in the place where I'm getting any benefit from the changes that, for example, took place with no tax on overtime or tips. But if you are accepting that, if you accepted stimulus money, if, there's so many different things that I think that in time people have benefit from. So I hope that they look at it and they're open-minded and not turned off to accepting this and getting started with it, and potentially, even if it's a small amount, continuing to build on it. I hope that no one is that apprehensive or that anti have those feelings against this administration, and that's the reason for not accepting it, because this is a way to give your child a head start. Free money that is deserved, that we deserve to take and apply it in this type of way. Okay. And it being locked into investments, it doesn't turn me off. I'm not intimidated by having to pay taxes, having to face what it may look like when it comes time to apply for the FAFSA. Uh, I'm that type of person, and I've had people say, well, it's certain amounts are not significant because down the road, inflation and giving their opinion in that way, but it's usually someone who doesn't have much. I take what I have and grow it by any means possible. So those are my goals. So I guess I hope I clearly gave my feeling on the Trump accounts and a few key points so that you can continue to take a look at it and potentially open it for your child under the age of 18, even if they're not going to, they don't fall into the date range of being able to get that $1,000 contribution. Think about it. But definitely reach out to friends and family members and make sure that they're taking advantage, or at least they know about it. And from there, they make their own decision. If I was making the decision for my child, I would accept it and get that money invested. So I put in a few scenarios, and if you're not familiar with this is the investment calculator that I often use and encourage people to use for themselves to see how their money is on track to grow, how they can continue, put in your starting amount of what you currently have in one of your investment accounts, what you're contributing on a monthly basis, and then, do some forecasting, do some research and see how your money can grow and set goals for yourself. Now, I know everyone doesn't have $1 million have has that as a goal of having $1 million investment portfolio. But whatever your number is, you're not going to know if you're on track to achieve it if you don't take steps like this of even knowing what do I need to do to get there. So we can maybe come back to this later on and think about, throw some numbers in to see how what we would need to do in order to get to, for some of us, that first 100,000, that first 500,000, and of course that million. But then I put in numbers ahead of time for what that $1,000 could look like after 18 years. So, depending on when starting with this child, if they're very young, I just figured we would go for the first 18 years. I used a 10% rate of return and no additional contributions. And so it came out to $5,559 under this scenario. I used 10% because that is an average rate of return when it comes to the S&P 500, which is basically what they're designated that the type of fund that you're going to have to invest this into, the US stock market. Now, on to the next one. And so after 40 years, which I figured, kind of that mid point in life, you're not near the late 60s for retirement. What could that $1,000, no additional contributions look like? And at this point, we're at about $45,000 just from that $1,000 contribution sitting, just buy, invest it, and just hold. And then the last scenario that I put in was that same $1,000, no additional contributions, and we let it sit for a total of 67 years. And at this point, we're over $500,000 at 593,000. Now, these are just estimates, but in my personal experience through investing, looking at years like we had in 2023 and 2024, you're going to have some much more substantial years as far as the performance of the S&P. But, this is just an average. I think in time, most likely you will make out even better than using just this modest rate of return. And then after, that initial first 18 years, and it's in that traditional IRA, you can then maybe mix in some more aggressive investments make some changes in order to make your money grow even more substantially. So just something to think about. And like I said, I haven't ever had the mindset to turn down uh, a refund, stimulus money, anything that I was entitled to. I did receive stimulus money, back in the early, whenever we were getting them back in 2020, 2021. And I initially put it into savings, but in a short amount of time, once I got myself together, I made sure to get all of my money and my daughter's money, especially all of my daughter's money, into savings and into a UTMA account and a Fidelity Youth account when she got a little bit older, to make sure that that money was really growing. I didn't need it for my household. I didn't have any, everyone that was working in my household had no interruption with their work schedule and their income. And so definitely didn't need to ever touch the children's amount that came in from the stimulus money. So it was going to be 100% saved and primarily invested on her behalf. So, all right. So let's see. So my recommendation is take full advantage. But I haven't seen anyone in the chat mention if they know anyone who has signed up yet and got their account funded. But feel free to share. Good afternoon, David and Rod. TWP. Is this considered taxable income? So once they're of age and applying for the FAFSA, yes, I think it is going to be considered income under the child's name when it's turned over to them at that age. So, but to be able to grow, an amount to get free money and be able to grow it, even if it is at that point just a few $1,000s, I wouldn't leave it on the table. All right, let's see. Okay, so next up, let's talk a little bit about the SpaceX price targets that I recently saw that I thought might be of interest. So these are the Okay, sorry. I was trying to get it a little bit bigger if I could. SpaceX. So SpaceX IPO'd very recently, and now their earnings are going to be coming up soon. But I'm starting to see things like this, posts coming across my timeline. This one is from Yahoo Finance, and it's giving some price targets for SpaceX, even though we haven't had those earnings yet. So it's currently trading at about $145. And the analysts on Wall Street are giving it an average price target of around $242. Some as high as you can see here, Morgan Stanley at $300. So I just want to highlight this. I have never invested into an IPO yet. Many people were not able to get in at the actual IPO price, which I think was $135, people that had their orders in ahead of time. But I just wanted to share this and give you guys a look at how different banks are rating this. So we have UBS and Goldman Sachs rating it as a buy. And just for general knowledge, that means that the analysts are very confident that the stock will go up significantly in the future, even though they're giving more of the modest end at 210 and 205. Now, going on to the ones that are marked outperform, they expect the stock to do better than the overall market. So they're giving a slightly higher price target already. And, that wording rating is what I wanted to highlight of what they mean. And then even more significantly, overweight. They are recommending that you own more of this stock than the average that you would usually put into an individual stock when it comes to how you're building your investment portfolio. So, as I said, I did not invest into SpaceX yet. For now, I'll just be getting exposure through my ETFs as it is added into my various ETFs that I hold in my portfolio. I think the first one, or the only one for now that I'll have exposure to it through, will be my VTI. It's not expected to be added to the S&P yet. It will be added into the NASDAQ, but I don't hold any QQQM in my portfolio. So this is a look at the movement of SpaceX so far since it has been, since its IPO date. So overall down 9.72%. But I was just looking at this article, and someone who was able to get in at the exact IPO price of $135, that was back on June 11th. Their $1,000 investment at that IPO price would be worth about $1,076. So they would be having a 7.6% gain. But for those who invested, once it hit at 160 to 185, most likely, well, not most likely, they are definitely currently in the red right now when it comes to their investment. But it still remains a high risk investment, still very new, but it's anticipated, according to those analyst ratings that we took a look at, to have a high reward in the long term for many investors. But it's something that you have to make the decision for yourself if you want to deal with the volatility of investing into it in these early stages. Right? Okay, so now I'm going to touch on the earnings. I just posted the earnings calendar right before we got started with the live. So let's take a look. I usually post it not every week. If there's something, if it's a week where there's really nothing that I find too exciting and notable of any companies, I don't bother to post it then. But I try to remember to do it all the other weeks. And so this week, who I highlighted here are Taiwan Semiconductor, Netflix, and ASML are having earnings this week. And a lot of banking stocks fall into this week. JP Morgan, Bank of America, Citigroup, Wells Fargo, and more. And then I also put in here a little sneak peek to next week when we're going to be having Google and Tesla on the 22nd of this month. I'm not sure if that's next week, later this month though. So be on the lookout, be ready. If you're a person who, pays that level of attention to your portfolio, understanding these things can help you to understand the movements, the volatility, those dips that you might see in your portfolio when it comes to companies that have those largest market caps that are going to impact our funds. Definitely the individual stock if you hold them, but the funds also if they have a heavy weighting and a high market cap. So when it comes to I hold, looking at the three companies that I highlighted for this week, I hold Taiwan Semi and Netflix in my portfolio. As far as ASML, that is a top holding in SMH. Let's take a look. So when it comes to SMH, that is the VanEck Semiconductor ETF. ASML comes in seventh place with a 4.99% weighting. So that is a Dutch company. And so this is how I'm getting exposure to it. It is a company that I'm glad to have exposure to, because it is one of the leaders. As you can tell from its weighting being in the top 10 of this fund in the semiconductor area, that I've decided that I want to have that additional exposure to. So David is sharing that he finally broke down and added TSM. I hope I'm not too late to the party. Okay. I've had I really haven't been adding. I bought, I think it's about 15 shares of TSM I've been holding in my portfolio, in one of my long-term portfolios. But let's see, over the last 5 years, uh, TSM, which is Taiwan Semiconductor, is that what? Yes, that is what David is mentioning. So over the last 5 years, it's up 260%. Over the last year, it's up nearly 90%. So yeah, it's been making some strong moves. Not as good as SanDisk and some other names, but I'm glad it was a good addition when it comes to my portfolio. SMH has done well for me. I also have NVIDIA and MU from the list. Okay. I don't have any Micron in my portfolio, but I have definitely have NVIDIA. I have NVIDIA in 2 portfolios also, but no Micron yet. So guys, if you're enjoying this conversation and you're not already subscribed, consider subscribing to the channel. Put on that notification bell so you can check out more of my videos and live streams. Okay, so yes, those are some earnings reports that I wanted to highlight that are coming up later this month or later this week. And guys, make sure to check out my my latest video that I put out, and I kind of mix it up. In the past, I've done a few videos where I did my top 5. And this time I decided to do something a little bit different, and I decided to share a few positions that I'm up over 100% gains on. And so in this video, spoiler alert, Taiwan Semi is one of the companies that I highlighted. So if you haven't checked this out already, please do, and leave me some comments and let me know what your thoughts are. All right, so guys, let me know if you have any questions or comments about any individual stocks or funds that I've mentioned or that you want to take a look at. Jamal, you're late? Yes, you're a little bit late. I start at 3 o'clock, EST on Sundays. So have that notification bell on, but you can always catch the replay. And if you do come back to my videos, my live streams on Monday, I usually try to spruce them up a little bit, put chapters on there for you so that if you do get in late, you can know where to pick it up from if you want to catch the portion that you missed during the live stream. All right. Let's see. right, so we're going to take a look at iBots. So this is the VanEck. All these ads popping up, sorry. The VanEck Robotics ETF. It has an expense ratio of 0.47%. Let's look at the details of it. Inception date, April of 2023, 69 holdings. Its return has been year to date 25.71%, 42% over the last year. So no 5-year, that's as far as we can go out because it's only been around for about 3 years now. So this is a niche kind of an ETF, just like my SMH, and robotics, just like AI. There's so many different branches of it nowadays. So I definitely see the appeal of having something like this in my portfolio or in your portfolio. I haven't added or done much research on this one yet. Let's go back to the previous screen. So ASML is a top holding here also. Similar weight to what we saw in SMH at 4.91%. We have NVIDIA. Those not Rocket. Those are the most, I think, familiar names. Applied Materials is has a 1.8% weighting. I'm just trying to highlight a few names that I think many of us would be familiar with, because robotics may not be something that we're that familiar with just hearing the company names. So let's put this in comparison to the S&P just to see. And yeah, you see year to date, year to date. Year to date, I'm sure on all the time frames, we can see that a fund like this is going to outperform. But that's what they're designed and hopefully built for, and are able to complement those more basic investments when it comes to your portfolio in order to give yourself that higher growth. But with that, it comes a higher expense ratio. So always be mindful to make sure that it continues to stay on track with your goals, because you are paying those higher fees to be holding on to something like this long term. Now, going out to the 3-year time frame, which is about how long iBots has been around. In that time frame, it's kind of close in line with the S&P itself at up about 83%, while VOO, the S&P 500, is up 79%. So these are the type of funds you have to be ready for the volatility and, decide for yourself if it's a good fit for your long-term strategy. So it has a lower expense ratio than higher than my SMH, but lower than trending funds right now like DRAM, which I believe is 0.65%. But something that I definitely would incorporate if I wanted to have this type of exposure, if robotics is an area that I wanted to have exposure, I think it's a good way of going about it. I think it's always good to add some things into your portfolio for that additional growth, especially if you are younger and have the time frame in order to give it time to grow. As you get older, I encourage you to make sure that your portfolio is a bit more conservative, ready for you to be able to draw from it, maybe shifting it into some things that are going to give you that steady income. But I definitely always try to highlight that, think about that, because some of these target date funds and things, investments that you could be in, if you have a long investment time horizon, I encourage you not to be super conservative. But as you get older, you have to be ready to preserve and be ready if we do have those stretches of time when we have like 3 years of a decline when it comes to those big indices. I wouldn't want someone to be in need of those funds uh, and ready to tap in, and then a large portion of it is significantly down, waiting for that recovery. VOO expense ratio is really low. Why? I guess we can thank Vanguard for that, for creating low cost funds, as well as the structure. I'm not sure why they did that, but I'm glad that I'm able to incorporate and find funds that have those low expense ratios for the diversification and stability and exposure, all of the things. I guess diversification, exposure is the same thing, but um, don't feel that because it has a low expense ratio, it's not a quality investment. It's a way of getting exposure to the S&P 500. And I think some of you guys might have been in the live on Friday, and we're throwing out some different funds. If anyone wants to take a look at any of those that we were talking about then, you can feel free to bring them up. But another one, if you're holding long term, another ETF with even a slightly lower expense ratio, let me share this again, is SPYM, which is the State Street Spider S&P 500 ETF. Now that one has an expense ratio of 0.02%, and it has a lower share price at $88 as opposed to nearly $700 with VOO. So something else to consider. If for some reason, well, the lower expense ratio, that's a given. You're saving there. Um, Almost identical dividend yield, so you're not giving anything up there, but you'll be able to save just a little bit on those on the fees as far as the expense ratio. So I was not aware. I think it used to be called SP. I forget the old ticker symbol. It used to have a different ticker symbol before they changed it to SPYM. But I was mentioning on Friday's live that the SPY, when it comes to this channel over here, the SPY, which I believe is the first ETF that was ever in existence. It's the oldest. It also tracks the S&P 500, but it's an expense ratio of 0.09%. So if SPY is in my portfolio, it's because I'm holding a SPY call or put. It is trade status when it comes to my portfolio. I use it for trading only, not for investing when there are other alternatives like VOO or SPYM. And when it comes to my long-term portfolio, I do that over at Fidelity, and then I use FXAIX in my long-term portfolio. So it's rounded up here, but the expense ratio is 0.015. So think about that as $1.50, $9, $2, $3 when it comes to your expense ratios. So, okay. SPYM and VOO, same returns in the long run. Yes, they both track the S&P 500. So yes, it's going to be the same. Now, sometimes there are funds that it might be called, the large cap something. It might not track exactly, but looking at those funds, you see it actually says S&P 500. This one says S&P 500, Fidelity 500. So these are pretty much going to track exactly to the indice, and they'll have the same. Let's take out the iBots so you can see it on the chart. And this site that I'm using right now is called Stock Analysis on the Compare tab. So just something that you can do. So taking a look at the 4 funds, there's slight differences, but you see 85.5% and then 86.09%. So they're tracking pretty much identical, just to show you. But sometimes, if you have a large cap, not sure of the ticker, there are a couple at Fidelity that are actually zero funds. And so it doesn't track the exact S500. It's something similar. But I think I call it the generic version. So it'll have a more significant difference when it comes to the exact returns. But this one, as you saw, it was about 0.5%, or just nearly identical. Oh, that's great. Just started my career right now. We'll try to accumulate SPYM for the long run. Okay. Can't go wrong with that as a good foundational investment. Yeah, so when people are getting started, I don't want anyone to sit around having analysis paralysis and thinking I have to have some large sum of money and I don't know what to do. While you're figuring that out, I would encourage everyone to at least get started with a total US stock market or an S&P 500 investment. It's going to be a good fit for anyone's portfolio. After that, you can do the work to find out, if you want to have individual stocks, if you want to develop into that type of investor like I have with having, different companies that complement my investments into funds that give me that more direct exposure. Low expense ratio plus low stock price. So, you like that combination? Yes. But that's something that can give you just that extra, extra boost of it. It might give you that good feeling of seeing your share size be able to accumulate more quickly. But really, when you look at the details, it's the same thing. When you get the dividends, you might get a quarter when it comes to a share price like the SPYM, when you're getting $1 when it comes to the VOO. But it's all the same. But I definitely get it, and I definitely like when you have to do what gives you the incentive to keep on going, So I like to make little challenges for myself of getting to different dollar size goals and share size goals and build in that way. And yeah, if you have SPYM, it's definitely going to move up more quickly. Okay. So Amal is I'm not sure how to pronounce your name, but you're over there laughing at me. Okay. Oh, it's funny. You seem like you picked one of my emojis that I put in my Okay. All right. I'm taking a look back. Does anybody have any other questions, comments, thoughts on the Trump accounts that you want to share? If it was you, if you had a child that range to get the $1,000, would you take it? Do you have a child under the age of 18 and you plan on opening one on their behalf on your own? All right. And as Amal mentioned, the low share price is something that was appealing about SPYM. but I'm going to be doing, I think my next video is going to be about investments that I got into before the stock split, and some current investments that currently have those higher share prices, and to not let that hold you back from getting started investing. If it's something that you've done your research on and you want in your portfolio, that will never be a reason for me not to invest because of the price. Trump accounts are owned by State Street. The Trump accounts are on the Robinhood platform, which is a reason why Robinhood stock is expected to be positively impacted because of that move and that connection that they have there. What's the best advice for somebody starting career? Which investments is best to do? A video and topic, if there would be, that would be helpful. So someone getting started in their career. So are you talking about investing on your own? Are you talking about investing through your employer's 401k plan? What is it that you have available to you? You can definitely leave me a comment after the live stream is over on any post or video, and I can share with you videos that I've done, because when you are focused on investing through your employer plan, your investment choices are usually very limited. So I look at it like this, like you're combing through to find the best available. I want you to, Amal, let me know if we're talking about 401k or we're talking about you're creating your own Roth IRA, because I'm talking about the scenario of you're working through your employer plan. So with that, you might have the target date funds, a few select mutual funds that you can invest into. So you'll probably be defaulted into that target date fund, but make sure that you get in contact with them, do the research, and then know all of the investment choices, and then go through some of the steps like I was doing today. It might not, I worked with people on different platforms, TD Price, there's so many different brokerages out there. So, and their employer, each employer may have a different mix of funds that they allow their employees to invest into. So this is why I encourage you to take the time and do the work. It's not just a blanket one size fit all thing. So get in touch with your whoever's holding the brokerage company that's holding your retirement plan, and know all of the investment choices, and then look at them. What is the expense ratio? What is it tracking? What are the holdings? And so you can see if you can find something that's similar to the S&P 500, something that's similar to the NASDAQ, something that gives those higher exposure to some of the sectors that we took a look at today. So if not, if you have to go with that target date funds, then you can take a look at the details of that. What amount of it is into stocks? What amount is into bonds? When I'm limited to a target date fund, I'm looking for one that is going to have 92%, if I can get it even higher, into stocks, because that's where the growth is. And so one way that I've gone about doing this is by using a target date fund that does not correspond to my age. And this is not financial advice. This is just something that I've done, and it has personally worked for me. So I want people to be aware that you don't have to, you may not want to go 15 or 20 years out, but look at the details and see where you would be comfortable, because you can definitely be in something that I think is going to give you higher growth potential, especially if you are younger and have that time for your investment to really thriving instead of being in something so conservative when you have that time on your side, that time horizon of when you're going to be retiring. So what target fund it is this? Hmm, so you're in a 2065 fund. Okay. Okay. And okay, that's pretty far out. That's pretty far out. So you must be on the younger side. So, but still, take a look. There's probably not that much more. There's probably not funds that are further dated out than that, but there might be actual mutual funds. I know when I was working at a company that I was working at that used Fidelity for my 401k. I was able to invest into FXAIX through my employer plan, which is direct into the S&P 500. So I decided to go with that as opposed to sticking with that target date fund. So I hope you understand what I'm sharing there because I'm not pulling up any visuals, but I think you get where I'm going. Jamal is jealous because you're in your 20s. Okay. All right. So, how did you discover my channel, guys? So the target date fund, yeah. So I'm glad I like to see I like seeing that you at least know this much. Target date fund 2065. Now, if you're willing and interested, I'm going to throw some homework your way. Take a look at some of the things that I was saying. Take a look at what is the breakdown? What percentage of it is into stocks? What percentage is into bonds? See if you can find some of the top companies or mix of holdings that you're getting exposure to. And like I said, find out if all of the offerings, because you might want to do a mix into a mutual fund and then a portion into this target date fund. But just like we've been looking at today using these charts, whether you use something like the stock analysis or just going direct to like Google Finance, or you may have to stick to that particular brokerage company's site if it's something that you cannot figure out what a ticker symbol that you can put into a platform like these is. But look at that performance and then set a bar for yourself. I often tell people use the S&P 500, whether you use VOO or you actually VOO or you actually put in S&P 500 indice, NASDAQ indice, and then you look at the performance of the fund that you're in and then compare that performance once you figure out what it is. If it's a very new funds, 2065 funds, you might not be able to get much detail, but I'm telling you, I'm trying to encourage you to comb through, do your best to, even if you have to use the fund 5 years down from that one, see how their funds are performing against an indice to see is it performing in line or is it underperforming? And if there's other options, do the same with those to see what you can do there to make sure that you're maximizing your investment. Okay. I have no idea about, okay. What is the ticker? Okay. Yeah, some of the tickers are not when it's on a particular brokerage, it's not as easy to identify as some of the ones that you guys are sharing. You have no idea. Okay, have to dig more. All right. Well, I'll be very proud of you if you keep on digging and you make improvements to your portfolio because this is the time to do it when you're in your 20s. And, listen, I love to see it. I just love to see it. Browntown channel brought you here. I don't know who Browntown is, but thank you for sharing that. I remember they were saying something about SWYOX. I'm not familiar with what that is. Charles Schwab. Okay. So, all right. So I'm going to take another station break because that's what my chat is telling me to do. If you're not already, subscribe, like, hit the notification bell. Make sure to check out some of my recent videos and leave me a comment. Don't forget, whether it's a comment, a question, just let me know you agree, you would disagree. Make sure you're giving my content some engagement in that way. And have that notification bell on so that you know when I'm going live. Every once in a while, I do a pop-up live. And consider becoming a channel member. I do have a channel membership here. There are some links in my description of my videos of some other ways that you can support the channel. Let me get rid of that. Oh, so you is that the ticker for your funds, Amal? Or was Jamal just using his judgment and chose a Schwab fund? Yes, that this I'm not sure. I'm not sure. But guys, let's put this over. This is this is the last thing we're gonna look at for today. Let's put this back over to the stock analysis. Clean these out. But thank you for the example. I've shared an example that I had in my videos of a fund, a target date fund that I was in over at Empowerment. Okay, so we have an expense ratio of 0.08%, dividend yield 1.66. And what is this made up of? So we're getting 52% into Schwab large cap, then we're getting almost 25% into Schwab International, Schwab Emerging, small cap. Then we have REITs and aggressive. It looks like this is called something U.S. aggregate bonds. Okay. Let's go back. Okay. So yeah, so this seems like a pretty good mix. We're having a very small percentage in bonds. But the most significant portion into US large cap. I would like this to even be higher, but what I was saying about I would want to be 92% or, you know, around there as far as stocks. This is a fund that is very well, you know, heavily weighted into stocks. I love seeing this little tiny percentage into bonds. And you know, you're getting kind of a high exposure to international. Overall, I lean more towards US stocks, but it seems like a pretty decent mix. So if this is not your exact fund, if this just happens to be a 2065 fund that we're looking at, we were able to just use it as an example, but you can take a look at the actual brokerage company that your company is with. But even like I said, even if they have like someone was sharing the VX, let's see, the VFIAX. What is that? Oh, that's a Vanguard fund. That's a Vanguard fund, not a Schwab fund. I guess it would start with an S if it was a Schwab fund. But if Schwab has something that's kind of similar to an S&P 500, a total stock market, different things, large cap funds, it might outperform your target date fund like we're seeing here. So you might want to do a mix of both instead of just being, they make those target date funds, I think, for simplicity. But like I said, you're young enough. If you just put a little bit of work into understanding, you're knowledgeable enough. I just want you to have the confidence to not feel like you have to stick with it. If you're able to make some comparisons, you might find mutual funds, index fund, mutual funds that can complement that target date fund, or not do the target date fund at all and consider just going direct into a fund that's not going to give you that mix, even those smaller percentages into the REITs and then the bonds. You'll be much more heavily weighted into the stock market. And just taking a look, I know these are not, a match as far as even brokerage, but the fund that I put in, the VFIAX, has half of the expense ratio of that target date fund. So just do some comparisons and take a look at what your real plan has available for you. Okay, I'm going to drop down to the bottom. Need to work on expanding knowledge. Yes. Target date funds are slow but reliable. Yeah, I gave you my tip. One way to accelerate the slowness is to not use the year, not use the year that corresponds with your age. Use one that's further dated out. That's not that's a tip for someone a little older, not for someone who's 20. The one that corresponds to their age might be good. But as you get older, when you're 40, you might want to still be using the fund for the 20-year-olds, is what I'm saying. Okay. Oh, hey, Jumpman. I'm not sure. I didn't see your comment. If you're still here, thank you for tuning in. Jumpman is a fellow Crown trader with me over at KGU, which is Keenan Grace's Discord. If you didn't know, I am one of the Crown traders over there. I'm the Crown trader that's an investor. So my channel name in the Discord is Long Term Lisa. All right. So you said, is that Amal said, you said you're glad that they chose the fund for you? Yes, but listen, just because something is chosen for you, I want you to still do some research. Don't just think it's the right fit, and don't think that anyone out here is ever advocating for you the way that you would do for yourself. I think that's a lot of what goes on with people, is that we think they're the expert and they have our best interests at heart. And sometimes I go into situations not with that belief. I go in there thinking that no one wants more for me than me. They may have some outside factors influencing what they're encouraging us to do. In this situation, of course, it's recouping fees and being able to benefit the company as opposed to you being in a lower cost fund. Oh, okay, Jumpman, thank you for still being around. But we're going to be wrapping up for today. As I said, I try to be here live on Sundays at 3 p.m. Eastern Standard Time, so have that notification bell on. Like I said, I encourage you to check out some of my regular long form videos. Always leave me comments, questions. If there's a video or a topic that you're interested in, most likely I've covered it over the last 3 years of doing content, but I can direct you to it or I can consider it, and then maybe it'll pop up in a Sunday live stream where we take a look at it together. But I will see you guys next week, and I will see you guys throughout the week, hopefully in my comment section of my regular videos. I will see you soon. Have a great week ahead. And sure to check out that earnings calendar.
And to investments, she made a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay. She'll make it pop. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Hey.